All right, well, good morning, everyone. Thomas Montgomery here. It's a beautiful Monday morning. Today is February 23rd, 2026. We get together most weekday mornings at 8 o'clock Central. Through our 501c3 nonprofit, we had applied for and received a grant, and the concept is quite simple: helping small business owners, prospective or current, get funding to start, to grow, to reach their potential. That sounds pretty simple, but if you think about it, there's lots of lenders. There's banks, there's credit unions, there's fintech apps, there's all kinds of online resources. So there is not a shortage of lending or lenders of money. The problem is in most cases that there's not adequate familiarity by the applicants, by the borrowers, of what the lenders are looking for. And that's the problem that we seek to solve through our trainings, is to help very objectively, very factually educate what does it take to get approved for a business loan, because it's not based upon how badly someone wants money or how badly they need money or how long they've been waiting to get money. Those are not part of the underwriting criteria. As many of you know, I used to work for the SBA, and an important part of what I did was go out and teaching many of these same concepts. I'd go to churches and chambers of commerce and libraries, so reaching the broad community. So we're going to go through some very important concepts today that are not tied just to our grant and our model, but it's very important that if you run into someone and they need money to start or grow a business, this is that foundation of knowledge that they need to know, and there's a good chance they don't know what you and I know. So, with that being said, we're on our daily Zoom. Our resource site is spefunding.com. It's shown in the background. I've scrolled down a bit, but the key is there's a three-step process if you wanted to access funding using the SPE model. My goal today is not to try to sell you on the SPE model. There's no upfront cost anyway, but the point is specifically to cover what we believe everyone needs to know. And then you could certainly consider if the SPE is a resource that would help you qualify. So let's go ahead and dig in. The first very important rule when it comes to getting business funding is that we first need to have a fundable business. And that kind of makes sense, although it leaves a lot of follow-up questions. But the concept is more important maybe than what the words first convey. We need to meet the underwriting criteria to get approved. And so often we interface with small business owners, they want to disregard that. Or sometimes they want to kind of work around it. But we're not going to be able to work around it. We have to meet the underwriting criteria for the type of financing. Now, the truth is there's different types of financing that have different underwriting criteria. And what we're going to focus on primarily are the larger business loans, low interest. Normally, it's a 10-year, 120-month repayment term. So we're not talking about these high interest, short-term revenue financing. We're talking about how do we qualify legally and ethically for a large business loan. The first concept is quite simple. We need to qualify first. Well, that doesn't tell us enough, so we need to go a little deeper. There is a formula for funding. I suspect you know it. I know it. We're going to discuss it. But the truth is, a lot of people don't know this. And so, if you care to help educate others, this is one of the most important concepts you can convey. What does it take to get funding? We need to have a fundable business. And the formula for funding is defined as E plus the three C's. E stands for having a fundable entity, the corporation or LLC that's in good standing at the federal and state level. Not real difficult, but we need to have that. So if we have a business that's been around and hasn't been filing tax returns, not compliant, that's an insurmountable barrier. We either need to get that business compliant or apply under a different entity. But where the rubber really hits the road are the three C's. You'll often run into people that want to explain away why this isn't relevant to them, but it is relevant to them. And so lenders are going to typically look at the credit worthiness, the collateral, and the capacity of the borrower. So let's talk about that a bit more. So there's actually two types of credit. There's business credit. How creditworthy is that business entity itself? Now, the good news is we can get a DUNS number and add trade lines. We've had multiple trainings. Actually, we talk about trade lines over here at the bottom in this bonus training. We talk about adding large, I'm sorry, it's the top one, adding large trade lines like business automobiles and business credit cards. But that's the business side. And then on the personal side, not all lenders, but many lenders are also concerned about how creditworthy is the business owner or anyone that owns 20% or more, owners, singular or plural. That can be an issue because a lot of times people will have credit issues. In our model, we're going to actually add trade lines to the business so the business is strong. And we actually provide a co-signer when needed on the personal side. So this can be worked around, but credit is an important underwriting element. Collateral is the second of the three C's, and collateral means what assets does the borrower have to pledge to the lender that in case the repayment doesn't occur as planned, that the lender can mitigate the risk and collect some money. And so collateral is incredibly important. Our experience is a lot of small business owners, they don't have adequate collateral. They have what's called a collateral shortfall. We see that, we understand that. So we actually provide collateral through the SPE model, so that won't be a barrier. The third and final C is capacity, and think of it as cash flow. Do we have the demonstrated ability to pay back the loan? Well, that becomes a little more complicated, right? Because we can put together, and we do through the SP model, we put together financial projections of saying, okay, once we get funded, here's how we're going to use the money. Here's the type of growth and our future projected cash flow where we can afford it. Well, that helps a lot. When lenders typically want to see that. But also they may very well want to take a look at right now, separate from getting the loan, do you even have enough cash flow coming through to pay back the loan? And a lot of times small businesses don't, right? Because they're needing the funding to start or grow the business. So they kind of get caught in the chicken and the egg. I need capacity to get a loan, but I need a loan to create cash flow. Well, we've seen that problem enough that when we built the SPE model and applied for the grant, we built it in. So we actually do provide 250,000 of capacity bank deposits. And so this is the formula for funding. You can like it or dislike it. It's objective, factually stated, but there's really a couple approaches of how to resolve if we don't have that. And that's what we're going to discuss here on the next item. So ultimately, if we need to have a fundable business to get business funding, it really comes down to just two choices, not an infinite, not three or four, two choices. We need to have a fundable business and we can either buy one or we can build one. Now, both of these options have pros and cons. Let's talk about each. When we talk about buying a fundable business, number one, it doesn't mean that we have to have any out-of-pocket cost or upfront cost. For instance, with the SPE, there are no upfront cost. We are transferring to them a fundable entity that has the three C's. That's true, but that doesn't mean they pay anything out of pocket. In fact, they don't pay anything out of pocket. They pay after they get funded with the SPE model. There's other businesses that you could go buy that would be fundable. Look around the town or city you live in. There might be gas stations, grocery stores, apartment complexes for sale. There can be lots of different businesses that you could buy. Now, you'd need the financing to buy it, of course, but then that business would have borrowing capacity itself. We provide a very simple approach by using the SPE with no out-of-pocket cost. The alternative is to build, to make something that is fundable, and that's fine. The formula still applies. We're going to need to start with an entity that is in good standing at the state and federal level, and we're still going to need to have creditworthiness at the business and personal level. We're still going to need collateral, and we're still going to need demonstrated capacity. So there are two options, and frankly, through our business model, we can help people do either, but our real focus is on the buy because the buy will work 100% of the time, the SPE model, as I've referred to. What we've seen historically is on the build model, it should work and it could work, but some people drop out before they get to the finish line. So we strongly recommend the buy approach where you buy, it's just a simple contractual transaction, no money out of pocket. Let us transfer a special purpose entity to you. Sometimes people get confused about SPEs. The SPEs that we design are set up as quote unquote management consulting firms, but that doesn't mean that that is what the individual client is ultimately wanting to do. It just means that the SPE is the vehicle, the entity that's doing the capital raise, and then the money that is raised then could be transferred to other entities for other purposes. So that's why it's called this. It doesn't mean, oh, everybody wants to follow this implementation model, but it does mean that we can use it for the capital raise with certainty and then transfer those funds elsewhere if needed. So that's the gist here. We've been around quite a while. After the three of us, Chuck, Mark, and I left the SPE, I'm sorry, SBA, left the SBA, we realized that there was a lot of entrepreneurs not being helped by that governmental model. And so we sought to find a private solution to that problem. And it's evolved and gone through iterations. The SPE, I think, is really the pinnacle because with no out-of-pocket cost, it provides the formula for funding. And so again, to learn that more, there's detailed training on SPE funding. There's a three-step process we ask people to go through, and you'll see that there's a training here. There's a bonus training relevant to credit. There's a training here, and then there's two bonus trainings. One is getting company cars, and the other is how feasibility data fits into it all. But the bottom line is coming over to step 3. You click here, it'll pop open a screen. There's a flyer that summarizes what we just discussed. Now, with the SPE model, it's not free, but there's no upfront cost. So what we can see here is there's no upfront cost, but there is a deposit. There is a deposit because we have to go build that feasibility data and create the letter of intent. But that's paid out of financing. Normally takes us about 7 days to deliver that. And then at that time, the client can decide if they want to move forward with the buy option, which does have a license fee, but it's not paid out of pocket, it's paid out of financing, or we can build for them, whichever they want. So then with that, there's an application. So we can actually go to funding right away. So literally on day one of being in the SPE program, we're actually going for that first tranche of capital. There's just a simple one-page app. The top half is business information if we have it. If we don't have any of it, it's okay. And then the bottom half is business owner information. And I know a lot of times people are concerned, well, what if I don't have good credit? Will it still work? Yes, we have lenders and financing options regardless of credit scores. All right, so let's get back over to our topic. What do we need to know to get a business loan? So we've covered the basic concept. You need to have a fundable business. You can't just stomp your feet and bang your hands and say, give me money, give me money. We have clients that call us and that's what they say or act. And that's obviously very adolescent. No, we need to have a fundable business. We know what that means with the formula. We can help people have a fundable business. It's either through the buy approach, which is the SPE, or more of the custom build. The SPE is probably the preferred model for most people. So the three-step process we've already covered here. If someone's interesting, we have our daily Zooms. And so the Zoom like we're having now, the primary purpose is to answer your questions. So I'm going to stop talking and start listening and reading your responses so we can go ahead and address questions, comments, concerns you have. I will let you know, though, if you've not come to spefunding.com and viewed the available trainings, you probably don't understand. This is illegal. It's an ethical model. It's risk free. However, it's a bit more complicated than just I'll go just to the bank and apply for funding. If someone already has a fundable business, then then we can just go right to the bank and go to financing. But that's rarely the case. Usually, people that think that don't understand the formula. We need to make sure that they have business credit worthiness and personal credit worthiness. If not, we provide both of that through adding trade lines to the business, providing a cosigner if needed personally. We need to have collateral for the loan, typically dollar for dollar. We provide that. And then capacity, we need to be able to show the lender that we actually have bank deposits. We have money coming in, and we literally provide that. All right, so let's get to your questions, comments, concerns, and we'll go from there. Aziz asks, how can get my profits? I don't understand that. It's a bit broken there, Aziz. I apologize. Fred's asking about the SPE training. So yes, sir, we're giving you a high level here, but if you go to spefunding.com, the training is under 1 and 2. And then Fred, if you'd like to participate, you come over to step 3 and click here. At the bottom is where our affiliate program is, which doesn't cost anything if you want to get paid to help people, others. All right. Aziz is also asking about trade lines. So yes, adding trade lines is important to have business credit worthiness because we want the business to be strong and then we want a strong business owner. We will provide a strong cosigner if needed. And again, that is defined over here. But he seems to be asking about the trade lines. So we work with each participant to see what type of trade lines that they would like. We'll usually start with a company car if they want it. They don't have to, but we can use the SPE to get a company car just like we have, and we had a training on that. So we can go get a very basic or a more exotic car. When it comes to trade lines, typically bigger the better because it shows more borrowing capacity and experience of the business. But we can work with the client, the grant participant, if they want a company car or not. They don't have to do that. And then after the company car normally comes company credit cards and lines of credit. Do they have to do those? No, but it does make for a strong profile. And then we can even add other more simpler trade lines. But it is important that we build creditworthiness of the SPE, which is part of the model. And then we're not going to really worry about the creditworthiness of the business owner because either they're credible on paper or not from a credit perspective. If not, we'll just provide a cosigner, which again is described here. All right, so what we're doing now is going through questions, comments, concerns that anyone has. Okay, the next question is about approvals. So when we think about approvals, let's bring back up this flyer here. And so how did we get to the flyer? SPE funding, and then click right here, and I brought up the flyer. So there are a couple steps to the process of using an SPE. First, we're going to collect a deposit. Doesn't need to be paid out of pocket, it's paid out of financing, and we have guaranteed financing for that, so that's not a problem. Once that has been done, then if it makes sense that the client wants to move forward with the SPE based upon their targeted geographic area, then we go into the license, which provides the other deliverables, such as the collateral, the capacity, the cosigner, and so forth. If they don't want the buy option, BUI option we discussed, then they don't have to do the license fee. We can just stop with the deposit and then we can go ahead and, which is not out of pocket, paid out of financing, and we can go ahead and then build the fundable business one off. So the client's always in control, but we always start with the deposit to build the feasibility data, the LOI, and then the client can decide, do they want to move forward with the SPE, the buy option, or do they want us to build it for them? Either way is perfectly fine. All right. Matthew's asking about the operations, and so this is a bit of an advanced topic, but we'll go through it nonetheless. So when we structure the SPEs, they can't just be nothing, right? We're building an entity that it's fundable and it's set up as a management consulting firm. Now, does the participant need to go run that management consulting firm? No, they don't have to. We're using that as the structure, as the reason for the loan, and that works. And again, if that doesn't make sense when you go through this training here, it'll make more sense. But with that, Matthew's correct. It doesn't burden you if you don't want to run that business after funding. You don't have to. You could not run it. You could own it and have someone else operate it. You could sell it or you could do nothing with it. But obviously we can't just go to a lender and get funding if there's not a structure, a loan package. And so the way the SPE works, and it's kind of the secret sauce, is that we show the lender that we're expanding a management consulting firm into a new geographic area, of which in this case Matthew San Diego he'd be the owner of. So yes, it's not a requirement to operate it. We need to show the lender that we have a business and a plan and so forth. But if you don't want to operate it, you don't have to. And we can visit individually, Matthew, if you need more help on that. All right. Aziz says a company car for him would be great. He would like to get a driver as well. Well, you're probably a big baller, Aziz. Yeah. So if you want to get a fancy car that someone chauffeurs you around, that's your choice. Fred is back. He's asking how long it takes to get funding. So the model is 30 days. And again, Fred, if you'll go through this training, you'll get the deeper dive. But we need 30 days to be able to get the $250,000 financing. You might say, well, why? Why do we need 30 days? Well, specifically, what we're going to do is we're going to transfer over 25 contracted clients, which is listed here. Each of those clients owe 10,000 to your SPE. So now you got 250,000 of first month income. We want to capture that and get that on the bank statement. So when we go apply for funding, they see that we have capacity, right? One of the three C's. If we try to do it before 30 days, we wouldn't be able to demonstrate the capacity, the cash flow coming through. So the answer to Fred's question, anyone else's, how long does it take to go to funding? It's 30 days. And the reason being that we need to transfer those accounts, get the deposits going into your bank account, and then show that on a bank statement. So there's the answer, Fred. Now, we can do an initial tranche right away, because I did mention that. Immediately from the time that you enroll in the SPE, fill out this app. Top half is optional, bottom half is required. We're going to go get you what we call your first tranche right away. And so that will hit normally within a week. But as far as getting ready for the large capital raise, we need 30 days because we need to assemble the three C's. We need to establish the credit worthiness, the capacity, and the cash flow. Hopefully that makes sense. All right. Aziz is asking about cosigners. So yes, so we had a training recently on cosigners because that's a big deal. And probably not for you, Aziz, but some people, they've just, for whatever reason, they've not managed their credit well enough that that's a barrier. Well, that's one of the three C's. And we developed the whole model to be able to deliver all three C's. So on personal credit, just come over to spefunding.com, watch this bonus training, and that's where we went deep took a deep dive into how we work, provide a cosigner, but there's no cost. So that it's not like, oh, can I afford a cosigner or not? It's not a cost issue. It's built in. And that's the concept that you'll see when you buy versus build. When you buy an SPE, which you don't have to pay for up front, you pay for it after financing. But the bottom line is it comes with all three C's. If we're going to build, then we need to work with you to bring the three C's, which can work as well, but it's probably more convenient to buy it and have it already there. Christopher asks, how would we use the SPE if the goal is to buy another business? Well, great. So first thing we would need to do is determine how much capital do you need, in this case, Christopher Walker, to go buy some business. So let's say that you want to buy a business that's an apartment complex, a hotel, a hospital, doesn't matter, whatever you want to buy. So essentially, what you're trying to do is to get financing to buy that business. Well, I think this is the best way to do it because we can use the SPE, and now it does raise capital in $250,000 increments. So you might say, well, that's not going to work. I need more than 250,000. That's fine. We can repeat the process. We can even duplicate the process. So we could do two SPEs at one time, so we're set for 500,000 in 30 days. Or we could do four SPEs and then we're set for $1 million. I know that people want bigger numbers, but everything has to match. And again, when you get into this feasibility training, that'll provide the backstory of why that's so relevant. But yes, we can raise as much capital as you want, Christopher, through the SPE model. However, each SPE is going to have borrowing capacity of 250,000. So we may need to repeat it. Just briefly so it makes sense. So this is set up as a management consulting firm. Let's say you wanted 5 million. Well, why don't we just go ask for 5 million through the SPE? Well, think about that. So if we have a management consulting firm that's expanding into a new area, that makes sense. That sounds good. We've got the feasibility data that we talked about to support it. But how would we ever justify to the lender that we need 5 million for a management consulting firm to expand in a new area? That's too much. 250 is the right amount. So we could change industries. We could say, okay, well, we're going to be a different industry that has a higher capital request. So yes, we could do that. And then that's what we'd call the build option versus a buy option. But the buy option, the SPE, goes in 250,000 increments, but we can repeat it multiple times at the same time, concurrently or sequentially, one after another, to raise as much as you need. And I know that's not perfect, but that's the way it is. We can always do a build and just go after whatever you need. But if we're going to do a build, now you're going to need to bring the credit, the collateral, and the capacity, where at the SPE we provided. See the difference? All right, let's see. Ryan says when adding trade lines and getting them to post. Yeah, that's a good point. So when we talk about the two types of credit, we have the business credit and the personal credit. The personal credit, we're able to get a cosigner right away, so there's no lag. Ryan's point, which is true, if we're going to add business trade lines, could it take more than 30 days for the business trade line to post? Yeah, that's a good point. It could. However, if you allow us to use the trade lines that we recommend, they tend to report quicker. Like the company automobiles tend to report quicker. The company credit cards tend to report quicker. If we're going to drop down to like those net 30 accounts like Uline and Granger, you're exactly right. Those could take a couple of months. But with the three C's, going back to that, if we have strong enough personal credit and we've built the D&B profile, even though the trade lines aren't all reporting, and we have collateral and we have capacity, we'll be fine to go ahead and get that first 250,000. But Ryan's point's correct. Some trade lines can take longer to report. Take our company car. We're picking our 911 up on Thursday. So we won't have our training Thursday morning, by the way, because we're going to go pick it up. This is something we've been working on for a month, but sometimes cars aren't instantly available. Sometimes they have to be imported and modified, and so there can be delays in getting business trade lines added, but that should not affect our ability to get the 250 in 30 days because we're providing a cosigner or using your credit that's strong enough. All right. Let's see. Aziz is back on his driver again. Yeah, and again, if you all want drivers for your cars, that's up to you. I don't know that that's real relevant here. Aziz says that he has no bathroom, he doesn't have a kitchen, and he doesn't have a garage. Well, I'm sorry, Aziz, about that. But regardless, if you're looking for funding, we can help you with funding with our model here. But Aziz is right. People come from all different starting points, all different perspectives. So we want to be compassionate and understanding. But from what we do, it's very simple. Well, it's an advanced concept, but the result's very simple. We're going to help people legally and ethically have a fundable business through the SPE. The SPE is a great turnkey option. It's what we call the buy option, where it comes with all three C's. There's no out of pocket cost. It's not a free program. We said it's not free, but the cost of the deposit and of the license fee, which totals 25,000, is paid out of financing. So we're guaranteeing a $250,000 capital raise, and they are going to spend cumulatively 10% of that for us to facilitate the capital raise, which is pretty consistent with the marketplace. Most people would say, yes, I'll pay a 10% fee for a capital raise. That's normal and commonly accepted. And again, it's paid out of the financing, not paid out of pocket. All right, I think we covered most everything. We'll be back tomorrow morning. If you're watching a recording of this and want to know how to join us live, here's where the link is to register live. Here's an on-demand version of this introductory training. But if you're considering the SPE, it's really important. I know you're busy and lots of things going on in your world, but 250,000 is a big deal, and you probably need to be properly prepared. And the best way that we can have you prepared is to go through these on-demand trainings. So that way we never have a client coming back saying, well, no one told me that. I didn't know that. Everything is available for you to view. And then we're here daily to answer any remaining questions, or you can always give us a call, 903-352-3390. Thanks, everyone. We'll see you back tomorrow morning. Appreciate your time. Bye-bye.